Alrighty, traders. Good afternoon, good morning, good evening, and welcome to the show this evening. I want to go ahead and double check to see if it is working. Just give me 1 second to double check and see if the audio is coming through. Yep, it looks like the audio is coming through loud and clear. All right, traders. Well, good afternoon, good evening, good morning, depending, of course, where you are in the world. We're going to go ahead and take a look at the market. We're going to go take a look at the euro, US dollar, as well as the US dollar CAD. And I know that there's a lot of people out there thinking and wondering what's going on. What is the market doing? Why is the market doing what it's doing? So we're going to go into a top-down analysis and break it down just so that you can understand what's going on in the market from a technical perspective, because there's a lot of things we can talk about from a fundamental point of view. And keep it in mind, traders, it is Thursday evening and Friday morning. We do have some European data coming out. So we talk about the euro US dollar. How's the market going to move technically, and what could we take from the news coming out tomorrow that could affect the markets, and how could it affect us in trades that we're currently holding? So with that being said, traders, I will see you right after this. Alrighty, traders, well, welcome back, and let's go ahead and dive right into it. And for those that are here this evening, welcome here, and I do appreciate everyone being here. George says, would you please check the pound US dollar as well? Well, the focus this evening is going to be on the euro, US dollar, and the US dollar CAD. But hey, guys, I certainly will take some requests, so go ahead and post in the chat. If there are a couple of things, I will go take a look at. We're not going to have a lot of time, but I will go ahead and do a quick review of what that pair is doing, and if we've got time to go ahead and cover it, I'll go ahead and cover it. All right. So with that being said, let's go ahead and dive into it. First thing, number one, let's talk about the euro US dollar. All right, because this is obviously a big topic of conversation, because the euro US dollar has been diving, and we've been looking at this and trying to figure out where is the top, where is the bottom, where's the bottom on this. And so what's important here is that we pay attention to what the market's telling us. Because listen, traders, let me just say this. And I'm sure this is something you've already said to yourself already. We can sit here and we can talk about what if, but the problem is, what if is not what the market's going to be doing, right? I mean, we could say what if, and the market could do that, but we could say what if, and the market could do completely the opposite to what we're saying. So the what if, get out of the habit of saying what if, all right? Because if you keep saying what if, then this means that you never prepared yourself financially, or never protected yourself in your risk from the get-go, from the start. And what's happening is you're starting to get to an issue where you may be running out of margin. You may be sitting yourself, you said, well, I'm getting myself over leveraged on this position. So not only am I going to talk about the way the markets are set up right now, but I'm also going to talk about traders that are maybe over leveraged a little bit, and what would be not what you should be doing, but I'll tell you what I would be doing if I was in a position that I was over leveraged, but I want to keep most of my positions in, and be able to benefit from the market turn around and heading back up north. I've seen in the past a lot of traders, not a lot of traders, but some traders, they go ahead and actually close out all of the positions when they get to a point where they feel the heat's starting to turn on, and then they close all the positions only at the time that the market actually turns around and heads in their favor. And they've given all that profit that they've made over the last 2 years back to the market, because they made a haste decision, because they got a little bit more emotional about their positions. And so let's dive into this, guys. And I'm going to be talking about a lot of this stuff. So let's go ahead and take a look and see what's going on right here. And specifically, I've got a trader that's in on the pound US dollar as well. And this is a pound US dollar that I've taken on. And I will take a look at the pound US dollar as well, break that down as well. So, Janet, I know you're there, and you're going to be paying a little more attention to what's going on with the pound US dollar and get a little feeling on that as well. So, let's cover everything. All right. We see if we can cover as much as we can in the session. So, once again, guys, if you're in the session and you love what I do with regards to the content that we post, if you want to see more content that we post, do more of these live sessions, keep you more updated, go ahead and do me two things. Actually, three things. Firstly, go ahead and smash the like button right now. Go ahead and smash it like it's no tomorrow. Second thing, go ahead and make sure that if you're not subscribed to the channel, subscribe to the channel. The third thing that you must go do is share this video out to as many people as you possibly can so we can get this out, because I know that some of you have got people that are also in the same position, that have trades that are being chewed up or spitting them out, and you want to go ahead and share that information with them. All right, so make sure you guys do this. All right, now let's go dive into it. Okay, euro US dollar. Remember, I'm going top down analysis, right? There's a top down analysis starting off the monthly time frame. Why am I going to the monthly time frame? Because levels, the market has certain levels that are important, right, traders? Certain levels are important. The one thing that you have to understand, and this is the deal here on the euro US dollar. Let me go ahead and pull in another there we go. I'm going to pull in this tool here. So this is the thing. You have to understand that the market creates certain patterns, all right? And certain patterns tells you where the market's going to go. Now, this is a typical example. If the market's setting up with, let's say, a good support level right here, and price keeps bouncing off that support, bounce off the support, bounce off the support like this, but then eventually breaks out of that support, right? This is called accumulation. Now, you've heard me say this before. I'm going to bring this up a couple of times because traders, it's important for you to understand this, right? This is the reason why you need to understand these things. The market creates accumulation. Most of the time, when we move out of the accumulation, the market manipulates. And what it's looking for is looking for liquidity, all right? Once price goes ahead and grabs liquidity, then it starts going into what we call expansion move. Now, the expansion target will be the top of accumulation. So this would be what we call the draw of liquidity for this pattern, this AMD setup. Now, when it moves into accumulation, all right, what it tends to do is, when it moves into distribution, what it tends to do is move back above that accumulation lows. Then it may go back and retest it and then start working its way to the upside right here, all right? Now, it can also go into this area right here, could also be range bound. The market could move into a range here first before it breaks back up. So we can see the market testing the bottoms, the tops, the bottoms, and tops. All right, you got that? All right, remember this, okay? Remember this. Because why? Because if you go back to what we're seeing here on the monthly chart, what do we have? We have the market inside accumulation. We had price manipulating to the downside. Price then moves back up, but back above this monthly low right here, and it's now accumulating. All right. So what are we seeing here? We're seeing accumulation right here. All right. We've got accumulation. We have the market manipulating. Now the market's going to distribute, right? And distribution means that we're going to go and move to the buy side of the curve, and we're chasing after this area over here. What's also important, traders, how do we know that price is going to continue to move north? Well, because there are what we call order blocks and insufficiencies that are now becoming bias to the upward trend, which means that we're starting to see bullish PD arrays. What is bullish PD arrays? Bullish fair value gaps, bullish order blocks. And so where can we see those order blocks sitting here on the chart? Well, here it is here. If you take a look right here, we had this big rally to the upside. Here is a fair value gap. There it is, fair value gap right here, sitting over here, fair value gap. Now, if that's a fair value gap, all right, then where is order blocks? Well, there's an order block. In fact, let me zoom in a little closer up here. I want to make sure that you guys can see this because I don't want you guys to miss out on this. So let me go ahead and make sure I zoom in a little closer up. Okay, so everyone saw this pattern, right? How price goes back above here and now using this area as a key level of support. Now, when I say support and resistance, I want to make sure that everyone's clear on this. Support and resistance is not a defined price. So we can't say that the support is at 1.0450, all right? We can't say resistance is at 1.700. It's an area of support and resistance, which means it's in this area. And the larger the time frame, the larger that area can become. So when we talk about area, we're talking about an area of support, an area of resistance. Okay, just keep that in mind. So don't go ahead and say, Big Dog, what number are we looking at? What is the actual price that the price is going to turn at? Don't ask those questions, because if I had a crystal ball, it probably wouldn't be the right answer in any case, because the crystal ball would probably be wrong 10 times, 100 times, or 100% of the time. Now, this is the deal right here, okay? We are at an area of support. Now, the order block, and I'm going to go ahead and zoom in a little closer up right here, so you can see where price action is moving right now. So if we got an order block, this is an order block sitting right here. Okay, there it is there. This is an order block sitting right here. Now, this order block, this was a bearish order block sitting there. Now, when the market breaks through an order block, that order block then becomes a breaker block, which is an inverted order block, right? Which means that it was bearish, all right, as price was, if price did this, as an example, if price went all the way up here to this order block right here, and then we saw a indecision candle, something like this, then it's most likely that we can see the market move back down, because this is going to act as resistance. All right. Now, price blew through that. Now, think about it this way. All right. If I had to go ahead and show you this, if I had to show you support here, and price goes ahead and bounces off here, price goes down, what is this support going to become? The support's going to become resistance, right? Right? It's going to become resistance. Now, let's go ahead and say this. If the market goes down and there is a support level here that is becoming resistance, but price moves through that and now comes back down to it, then this means that this was resistance and now it's becoming support again, right? And so think about that as an order block, all right? If there's an order block sitting over here and price goes through that order block, right? Then where it was resistance, it's now becoming support. So when the market comes back here, it's now in a support area. Okay. Now, the reason why I mentioned that, the reason why I mentioned that is because if you take a look right now where we're at, this order block right here is now become the breaker block, which becomes the inverted order block, which means this becomes now a support area. All right. And it's not just from the bodies, but it's from the high up here and the low down there. Okay. Now, we're in accumulation here. All right. We're in accumulation. And so when price is in accumulation, think like a retail trader. If a retail trader was going to buy this move going up here, where would they put their stop losses? They would put their stop losses below the lows, right? So here is where liquidity is. All right. There is where we call sell side liquidity sitting over here. That means they sell orders based on buy positions that have been taken. Now, what does that mean? It means that traders, that if you understand four concepts of why the market moves, and that is price, or at least the market tries to create liquidity, the market tries to hunt for liquidity, the market looks for rebalancing insufficiency, and rebalancing equilibrium. Those are the four reasons why the market moves. So if you ask me, Big Dog, why is the market doing this? Well, hunt for liquidity and create liquidity, right? And then rebalance insufficiency, rebalance equilibrium. So when we see price doing this, what is it doing? It's hunting for liquidity. If the trend is up on this, if we see that the market going back above here, now remember, I'm still on the monthly time frame, right? And so on the monthly time frame, I'm already seeing this, that, hey, listen here, we've come back above support right here. The market's been inside this range, and it's been doing this since the early starts of, or the mid part of 2023. So about a year, we've been sitting in this range, and it's not breaking out. It's not breaking out. It's testing the tops and bottoms, but it has not broken out. Now it's going to grab some liquidity there, and before it goes ahead and takes, look here, let me tell you this much. All right, so let me make you understand something, right? The market hunts for liquidity, but also creates liquidity. How does it create liquidity? Because it induces people to believe the market's going down, And what do? They enter the market, they put their stop losses above the high. Those stop losses above the high is where price wants to go ahead and sweep that liquidity and then go ahead and reverse. So there's always going to be some sweeping or at least some hunting of liquidity. And that's important for you to understand. Understanding price action like that makes it easier for you to understand where price is going to go. Now, let's go. So if you asked me, Big Dog, where is the Euro US dollar going long term, traders, based on the fact that we had this setting up right here, based on the fact that the market had gone ahead and moved back inside here, back in this range, right? Then I'm looking at the long-term goal for the market to go back up here. Why there? Because that's where we're going to have buy-side liquidity, all right? So buy-side liquidity is sitting over here, all right? And so price has now gone and swept all of the lows, taken out all of this liquidity, moved down here, moved back inside this range, all right? Back inside this big range right here. And so the draw is going to be up here. That's long term. All right. So now we all understand what the long-term goal is. Some of you are probably sweating blood because maybe you're in some buy positions and you're like, oh my gosh, I'm over leveraged. What do we do, Big Dog? What do we do? All right. So this is what we do. All right. We go down now down to the lower time frame so we can understand what the shorter time frame is doing. And so we can better understand what the markets are doing. So let's go down to a weekly time frame. Now, why is the weekly important? All right. Why is the weekly important? Because traders, as we head into the end of this week, we want to see the market showing some sort of stalling, right? And how do we know that price is going to stall? Okay, let me go ahead and give an example. If price goes down like this and creates a candle, bearish candle, and then price goes ahead and closes out and it creates another bearish candle like this, what does that tell you? When price breaks through that low, it's telling you the momentum is still down. All right, it's still bearish. So what are we looking for? If we look for the weekly time frame, what we want to look for is where is a low? Where's the low area? Because if this is the low, then we're probably going to see price continue to push towards that. You might get some false break, some false turns, but the market's going to continue to push until it takes out the low. Once it takes out the low, then what we're going to look for is something like this, where price goes ahead and sweeps the low and then closes up back above that previous low. And this is an indication that not only have we swept liquidity, which means we've hunted liquidity and we've grabbed it, but also we now see that price is struggling to break below the previous low. And that is a good sign that the momentum slowed down. It's possibly wearing out. And we've seen that buyers are starting to come into the market because the sellers are unfortunately the sellers have not managed to push price below that low. And so because of that, this would be the turnaround. Okay, you got that? Now, if we go into this now and we go ahead and break this down and we look here on the weekly time frame. So I'm not paying attention to this details, right? But I do want to pay attention to this low right there. That low is sitting at around about 450, probably 480, 448, around about there. So 1.0, 448. So we're looking for, and I'm not going to look for a reversal. I'm not going to pay attention to a reversal until we've taken out that low. All right. Now, if I look at the weekly candle, all right, this weekly candle is still active. So which means that by close tomorrow, I would have a better idea of what the market's really going to do in next week's trading. So what I'm going to be looking for in tomorrow's trading would be like, do we, and this is the question here that's important that we ask, all right, do we see the market sweeping the low right here? The low's at priced at it says here 1.0452, all right, but what I want to see is price sweep the low. Once price sweeps the low, the next question I'm going to ask, or at least look for, is this candle low right here. Do we see the market sucking back up and closing back above that low? And that's priced at around about 490. Call it for 1.0500. All right. So if we see this price doing this, breaking down, but coming up here and closing back above here, then what do we have? We have the market doing something like this, where we have a candle, all right, closing back above the previous candle, which is an indication that price has swept the liquidity there, and now the bears are failing to support that downward move, and the bulls are starting to come into play, which means we're getting some buyers coming into the market. Now, who are the buyers? It's the smart money, right? Smart money is coming in at those levels because why? Because it's the smart money that's pushing price down to take out that liquidity, because the market needs a fuel to move. All right, and liquidity is the fuel that it lives on. All right, and then in order for the price to move, it needs to get down to those areas, grab the liquidity, fuel up, and then take off again. Okay, now this is the weekly, so you know what I'm looking for at the end of the week. All right, now don't send me emails or send me text messages or get more concerned about this if we have the market not closing out like this. All right, because maybe it needs a week. Maybe we need another week for it to be able to confirm the support. All right. But what I do know is that it's coming to an area where we should be looking for the market now to start settling down and start setting up a possible retracement. All right. Now, if you ask me, Big Dog, where could it go to? If it's going to retrace, where's it going to go to? Well, trade is simple. What does the market do? There's 4 reasons why the market moves, right? If we see some sort of a reversal, what is price going to do? Price is going to hunt for liquidity. It's going to create liquidity, and it's going to rebalance equilibrium and rebalance insufficiency. So what we're going to do is we're going to look at first thing, number one, where's our rebalance level? Where's the rebalance? Rebalance would be basically taking this range and looking for the 5-hour retracement, and that's where price would want to go back up to. Now, if we see that level, then we also see an order block sitting over here. So which means that price is going to tap into this order block right here and want to go ahead and probably go to the midpoint right here and then maybe sell off. We don't know what it's going to do after that, but we've already looked at the monthly time frame, right? And we said that the monthly time frame is probably going to target this level right here. So we could get the market rallying up, hitting resistance, pulling back down, looking for old insufficiency right here, fair value gap to become support for the market, and then start rallying back up again. Now, obviously, this is a conversation we'll have down the line, all right? But the most important thing right now is traders, I will be paying attention to the weekly. So even though it may not be in office sometimes, I'm always watching the market, and I'm looking to see how the market closes on a daily basis, on a weekly basis, and then, of course, as we get close to the end of the month, on a monthly basis as well. All right. So we'll pay attention to that. Now, let's go ahead and take a look now at the daily. All right. Because we want to see how the daily, if we go to the daily right here, let's take a look over here. What does price do? First, number one, when price creates this move that we saw up the top, we normally have a deviation level, right? And the -2, -2.5 is where we anticipate price to want to turn, or at least this is the target for the downside move, right? So we're looking for price. When price creates this and takes out the low, price can move all the way back down to this level. Now you might say, well, Big Dog, why you got some buys on this trade? Well, traders, granted that we also look for correction moves, and we look for price to retrace a lot more to get to those profitable levels, even though the market's trending down. It doesn't mean because the market's trending down that we should just be selling, all right? We're not holding on to long-term positions. We're just looking for corrective moves and buying off these corrective moves. So, and the truth be the deal here, that when we got into this right here, we were actually trading off support. When we decided to buy off this, we were buying off support at the time. Yes, we got a breakout. We got into the wrong side of the trend. And what happened? Right? Price moved down. We said, okay, we're going to go ahead and cost average in. We've banked on it. And so we never got the correction that we needed. All right. And if that happens, we've got to always make sure that we have a plan to be able to figure out what we're going to do from that point onwards, whether it's add on more positions, add in more funds if your margin's running out, whatever it takes to be able to maintain your positions, you do that. Now, I am going to leave you. Please stay to the end. I am going to talk to those people that are running into margin issues and how you can manage your positions, because this is something that I'm going to be doing moving on for the next, I think we're going to implement it probably from December, from the 1st December, possibly 1st January. I'm going to talk about this, how you can get into trades, minimize your positions, minimize your drawdowns, and still take on some short-term trades, which means that we're going to be able to get into more active trades, a lot more active trades, but also not hold on to long positions for those that are interested in getting out on shorter losses. So this is the deal. The daily time frame on the euro US dollar, right? We're expecting for the market to U-turn. Are we seeing signs of that? Are we? Yeah, we are. All right. Where is it? Well, traders, let me go back to this. All right. Let me go back to this. What do we look for? We look for accumulation. When the market accumulates, what does it do? It manipulates. And where does it manipulate to? Well, what are the 4 reasons why the market moves? Well, you got it. You understand why the market moves in 4 reasons. Well, there's 4 reasons why the market moves, right? So we have accumulation, we have manipulation. Then the market's going to hunt for liquidity, right? When it gets to liquidity and takes liquidity out, what is it going to do? It's going to distribute. And this is going to be the target. So do we see that on the daily? Do we see that on the daily? Oh, wait a minute. What did the market do here? Market accumulated. Oh, what's the market doing right here? It's manipulating. Okay, so which means that when we start seeing maybe an indecision candle appearing like this, doesn't break above that, we could be moving into the distribution move. And then we can go into a lower time frame because we believe price is going to distribute. It's going to go ahead and try and get above here. And that's what we need on the weekly time frame. And when it gets above here, we could go back to this order block sitting over here, test it, bounce off there, and then go back again and break it. And then we're chasing after that high because what? That is our draw of liquidity here on the daily. What price tag? We're looking at 950. All right. So we're expecting price to want to move back up because why? Because price creates liquidity. Where's the liquidity? Liquidity is sitting right here. All right. Liquidity is sitting right here. That's where the liquidity is. So which means the market's going to come and try and hunt for that liquidity. All right. It's going to hunt for that liquidity. All right. And then, of course, liquidity is higher. We can start seeing some upward trend. Now, that was a really deep breakdown. And we spent, 20 minutes on that? All right. Was it more than that? Probably almost 30 minutes. All right. This is on the euro. Now, I really want to start on the euro because I did get a lot of messaging, a lot of people concerned. I wasn't in my trading rooms today. I've been taking some time off today, tomorrow, but I wanted to give you guys a little bit more input on what's going on in the euro. Now, granted, traders, I'm going to let you know, I am watching these trades. Even though I may not be in the trades or in watching the markets on a regular basis, I'm in these trades and I'm monitoring the markets on a day and a week. Don't talk to me in the week during the day because it's difficult for me to give you an answer what I think about the markets because I need to see how the market closes out for the day. It's based on that gives me directional bias. Okay, it's very important to understand that. Now, let's go ahead and take a look at what's going on with the US dollar CAD. And it's very similar, but we've seen a different pattern. All right. So, firstly, and I'm not going to go into such a deep analysis on this, but I'm going to go ahead and point out a couple of things here. Number one, what do we have here? We have accumulation. Price manipulated. By the way, this is the election low. So we had price breaking out. Price came into our 2.5 deviation. So minus 2 and minus 2.5 deviation. We found resistance. This is what I call my reversal zone. Found the market, but then it's come back down to retest this and we're starting to bounce here. So let me say this, that 39.50 is important. I'm watching that very carefully. All right. 39.50. Why? Because this is the top of the accumulation. I'm expecting price to want to come back down, sweep the low here on this accumulation low, which is the election low as well, and then rebalance to equilibrium, which is priced at around about 37.80 or 37.58. Now, when it gets down to that point, let's go into this a little bit deeper on some larger time frames. So I'm going to go ahead and take a look at the larger. And I'm going to go ahead and do some housekeeping here. I'm going to take all this out the way, and I'm just going to go up to the high time frame. Look at this right here. This is the weekly. This is fantastic. All right. We've got a big accumulation right here. If you look at this big accumulation. Price just swept the high right here. And what? If the market sweeps the high and then comes back into this area. And so what are we looking for? You see this order block sitting over here? That's actually the support that we saw on the daily time frame. That's accumulation. That order block on the weekly is the accumulation that we've seen on the daily. And so why is it important for us to break below that accumulation? Because once this PD array, this is a bullish PD array, once the market breaks below here, right, then that means it's going to be used as resistance. And that resistance is going to drive the market back down to liquidity levels, which is over here, all right? 3,400 or 3,450 down here. So price is going to want to come back down to these levels. All right, you starting to get a picture there? That's why I'm like, oh, I'm not too concerned at the moment right now. And I'm going to look for price to break there. That's what I'm looking for. I'd like to see price do that. Are we going to get it this end of the week? I don't think so. Maybe we could. We'll have to wait and see. You got to stop trying to guess what the markets are doing and just trade on what the market's given you. All right, traders, I'm telling you right now, there's a lot of good stuff that I'm going to see. I'm going to be passing on to you guys over the next couple of weeks to month, because these are going to be absolutely crucial, absolutely crucial to your trading. All right. And just so that you know, all right, traders that are been in multiple positions and are taking on more risk than they should be, and you've vented, not vented, but you've gotten reached out to me and you've spoken to me. I want to let you know that I do hear you and I do understand where your positions are, and not everyone's in the same position. But I also have been working for the last 6 months, all right, a little bit more than that actually, to work on a strategy that could be effective like we've been doing, but also be effective in managing and help managing your risk a little bit better. That's the only thing I always look at, is how can we, and you should do the same. How can I manage my risk a little bit better, so that if I go into problems one time, that I don't go into that same problem again. Always look at how to be able to manage that. Now, let's go ahead and take a look right here. So this is what we're looking for. We're looking for price to move back below this order block. And then once we do, we're going to look for price to come back down to this area right here, 34.50. Now, I know a lot of you say, Big Dog, if I can get into the money on this trade, I'm getting the heck out of Dodge. And I get it. I understand. You just want to get out, right? I totally get it. All right. All right, traders, go ahead and break down the pound US dollar right here. All right. Pound US dollar. Where can the pound US dollar go to? What does the market try to do? It hunts for liquidity, right? If I go to the this is the monthly time frame. Now, why I'm looking at the monthly? Well, we've got a week before the month ends, right? So if I look at the monthly time frame, what am I seeing here? I'm seeing that there is quite a bit of support here, all right, at this area. What? Why? Because there's an order block sitting over here. So I'd like to see the market respect this order block, all right, which means close above it. And then we could start looking for the market maybe to go and rally up. Now, I'm not saying that we're going to go ahead and continue to move up on the pound US dollar. I'm just saying that there is possibly going to be a way for the market to go ahead and move back up into rebalancing, right? Because the market always rebalance, right? And so because of that, it's important, and it's very important, that we understand that price needs to rebalance. And the price is going to rebalance once it gets off the support right here. So once we get off the support, we're going to rebalance, all right? And then it could go ahead and start working its way back down, because this is where liquidity is sitting right here. In fact, if I look over here on the pound, I get it. There is a lot of liquidity sitting over here. There's liquidity there, there, and there. And price is going to want to hunt for that. But we're looking at this order block, and we're going to see, hey, can we hold at this order block? And if we can, we're going to see price moving back up again. So now let's go ahead and take this down. Let's go ahead and move this down to something a little bit lower, right? So we can understand what's going on in the short term. So if anyone's holding some buys on the pound US dollar, and you're wondering, hey, how can I get out of my buys and reverse it and look for the downside move? Okay, so the first thing here is, if I look at the weekly, let's take a look at the weekly. Notice how the weekly has started to stall a little bit right here. And so at the end of this week, before I even see the monthly time frame, I'm looking at this weekly time frame right here. And I'm saying, hey, this is a big bullish candle right here. And so there's a little bit of insufficiency sitting over here. All right. And so if this candle stops or at least closes above that previous high, I then look to the left side here and I go, hey, we took out liquidity there and we've taken out liquidity here. So there's good reasons why price wants to go back up. Why would it go up? Because traders, let me tell you why it will go up. Because this is how the smart money wants to get retail traders. It's going to go up because why? Because some retail traders are starting to turn their positions and say, man, this pound's going south. I should be selling it. Just like people look at Bitcoin, and when Bitcoin's on a rally, what do? They want to jump in on the Bitcoin and buy on the Bitcoin rally because they don't want to miss out. It's FOMO, right? And then what happens? Bitcoin starts dipping back down. They go, oh crap. And then they start getting out of their trades, instead of getting back in, because maybe long-term Bitcoin is going to continue, right? We believe it. I'm in Bitcoin. I'm in crypto, in the crypto market. So yes, we're enjoying the fruits of Bitcoin right now. But when it goes up, must come down. What goes down must come up. Why? Because the market is always going to rebalance, right? There's always going to be insufficiency that needs to be rebalanced as well. So when we look at this right here, nothing holds forever. There's always going to be a rebalance. And so this is how we're going to see price want to come back and rebalance. So yes, we're going to come back up. Yes, we could go ahead and retest that previous low right here, which is sitting at around about 28.50. So yes, 28.50 could be definitely an upside move back to this area, and then continue to move back down to grab the liquidity further down south. And so that's what I'm saying. Traders, the smart money is going to push price back up again, not because it's going to be reversing north, but because it's going to try and grab some short-term liquidity, internal liquidity, as it starts building up for another downside move to the downside, right? So if I look over here and I try to break this down, I have to then go to the daily. So here I go to the daily. Now, if I look on the daily right here, what do we have? Okay, we have a move, right? This move right here. We got to pay attention to this move. Anytime the market, we have a market structure shift here, we got to look at this move right here. From there to there, that move is going to give us our deviation levels. What are we looking for? The -2, -2.5. This is where we're anticipating price to move to when we see a reversal in the market. So anytime the market sits and reverses, we're looking for price to go ahead and show deviation levels. So let's go ahead and put that deviation level in here and mark it off. Oh, I've already got it. There it is there. Okay, it's my bad. So I've got it over here. And so where's my 2.5? Well, it's all the way down here. All right, so you can see, yes, the pound US dollar may still want to continue down here, but that doesn't mean in the short term it can have some corrections. Why? It can have some correction because here is a sell side liquidity. There's sell side liquidity. Price is already capturing liquidity, which means we're going to see a little bit of retracement. All right. And then a sell off. We've got a lot of order blocks sitting over here. Price might want to tap into that area and then work its way back down. We've got a fair value gap sitting over here. We're going to get the market to rebalance insufficiency, which just means the price can come back up here, tap into the order block, and then head back down south. And if this buy side holds, we're going to continue to move down because the trend is going to be down towards this discount zone right here, where we're seeing -2 and -2.5 deviation of this move right here. That's what price is going to do. Okay. Now, any sort of pullback, where can we go to? Well, I said around about 28.50, and I think 28.50 is a good level that price may want to move back to before heading back down south. That'll probably be a good sell zone if we get confirmation of a sell opportunity. All right. Let's go ahead and take a look at last pair that someone asked me about was the I believe it was the euro pound. Let's take a look here. Euro pound. And there it is, euro pound here. Here we go. Traders, just looking at the daily, what do you see? Traders, just look what you're seeing right now. Okay. What are you seeing? Remember we said when the market hits support, and then eventually breaks out, we have manipulation. When price comes back inside here, we're going to see price come down here, and then you want to look to go back up north because this is where the liquidity is sitting. All right. And so because of that, let's go zoom in a little bit closer here. And if you take a look over here, what do we see? We see price go ahead and respect this fair value gap. But look at this daily candle. These are daily candles right here. What are we seeing? See this daily candle? It doesn't. It basically it doesn't close below that low. So it's starting to run out because the buyers are starting to come in here. So it doesn't break below there. We have a breaker block sitting over here. This area is in the breaker block, so this is key support. So remember, the market went ahead and created this sorry, my bad. I call it a breaker block. This order block. The market's gone ahead and created this order block right here and gone north. So this is an order block that prices are now using as support. We're starting to see the market starting to slow down here. So there's a turnaround that is expected here on the euro pound. looking for price to target this high right here. Okay. Now I'm going to take a look over here. And let me look for, oh yeah, hang on, wait a minute. I think I was at the right area. So let me go ahead and take a look here if I've got, okay. All right, cool. All right, so here, by the way, just give me 1 second. I just realized, excuse me, I just realized that we need to take on another position on the Aussie New Zealand dollar. So just give me 1 second here. So if you go to my Telegram channel, you'll probably notice that I've been adding some positions, or at least I've been sending some trades inside my Telegram channel. And so I just got to, once again, just fix something up here. And I need to do this. Sorry, my bad. I should have done this before we went live. But I want to go ahead and explain something here as I'm going to go. This is on the Aussie New Zealand dollar. We'll get into it in a minute here. All right. So euro pound, expecting euro pound to start working its way up towards this insufficiency, or sorry, this liquidity level right here. I want to go to the Aussie New Zealand dollar here for a minute here. Take a look right here. Do we have some news, by the way? Let's go here and take a look over here in the news. And we see that, yes, we did. We actually had this, we had Aussie data coming out. And then we've got European data coming out tomorrow, flash manufacturing, all right? So everything we spoke about, flash manufacturing could be the manipulation move that the market is looking for, right? So we could get manipulation in the market, all right? We're going to get manipulation in the market. And when we get manipulation in the market, what's going to happen? We're going to see price starting to dip down and then rally back up on the euro US dollar, right? All right, we're going to get the market dip down and rally back up again. All right, we just added a new position. If you take a look at it, we just added another position on the Aussie New Zealand dollar. Let's go to the Aussie New Zealand dollar. I want to go talk about that. Just the daily time frame. So on the Aussie New Zealand dollar, what's happening right here? Well, look at this. Price has gone ahead and accumulated, and this is what you're going to look at right here. Price has gone ahead and accumulated here. All right. And notice that we turned to the buy, we turned on the buy side of the curve. This is the buy side of the curve right here. Right? When we move to the buy side of the curve on this move right here, what did price do? Price started targeting this area right here. That's where the liquidity is. So we had the market moving to the sell side. We had a market structure shift right here. And then price started moving back up. We had a break of structure there. We had the market accumulating. And then it broke to the north side and manipulated out of this accumulation. After it did that, what did it do? It swept liquidity right here. And now what we're going to look for is price to move back down. So Aussie New Zealand dollar is chasing after the support down here. All right, just get a number. Around about 1.0984. All right, 1.0984. All right, traders. Okay, hopefully, listen here. Hopefully you guys picked up a little bit on this. Hope you guys understand this a little bit. Again, very important. And it's very important that you do not react on your emotions, but you react on the process, right? And what is the process? You've got to wait for confirmation of the market telling you what to do. Don't try and guess this. This is not about who can guess the right direction. We had actually we were running a sort of a bet with a couple of the traders inside of my trading room, or one of the traders in my trading room, that the euro is going to go all the way to 12.50 by 22nd of November. Well, clearly, traders, that's tomorrow, and we're nowhere near 12.50, right, on the euro. So the thing is this: let's stop trying to guess what the market's going to do, because sometimes you read stuff and you hear about all of these market analysts are speaking about the different levels where the market's going to go to, and some people saying, "Oh, this pair is going to go to the moon. That pair is going to go." Just stop listening to other people and just trade on what the markets are telling you. All right, and what's important here is follow the process. All right, be committed to the process. Be committed to the process. Don't be looking outside the process. The process is what, traders? Let me give you a breakdown what the process is number one, what's the market telling you? Number two, execute the trade and make sure you got good risk management. That's it. It's a three-step process. Let the market tell you what to do. Number two, make sure that you enter the trade with good enter the trade, but also make sure that you have good equity management in your trade. So if you are a trader that says, hey, part of my plan is like I'm going to cut my losses when the market moves to a certain level. Let me explain to you what this may look like. All right. So, and I did promise you that I'll talk about this towards the end of the session. So, and I'm glad you guys stuck around because this is important. For those traders that said, Big Dog, I don't like to get into long-term positions, but more importantly, I don't want to be adding a lot of positions. I don't like adding 20, 30, 40 positions. I'd rather not do that. I'd rather cut my losses short and then and reverse in the opposite direction. Fantastic. I've got a great opportunity for you here. Okay. So this is it right here. And by the way, this can be like for any trader. If you are in, let's say the market's rallying and you end up seeing a nice little dip and you buy the market here, and your strategy is to cost average in. All right. So the question here is, when do you stop cost averaging? When do you stop buying? Or when do you cut your losses and say, I'm done with these buying, I'm going to cut my losses, and now I want to look for the opposite direction? When does that happen? Traders, is very simple. The market's going to show a big bullish candle like this, right? And let's say with a big bullish candle, you decided to go ahead and buy in. Then the next candle is going to go bullish right here, and you think, okay, great. We make money. We get out of this trade. We take a profit. We're short-term trading, and we get in again with another buy, and we buy in again because the market's bullish. But now the next day, without taking profit on that trade because the market didn't go in your favor at first, but it started heading south. The question is, when do you stop adding on? Well, let's say we buy here. Let's say this daily candle is maybe 100 pips. And you buy here, and then you buy here, and you go, okay, I've got 3 positions in. Now the daily candle, the low is right here. That's the low. And then you buy in again here, and you go, oh my gosh, I'm getting nervous now. I'm worried about the market going against me. Well, don't worry. Follow the process. What is the process? Listen here. If the market ends up closing out below this candle, and you have a expansion move below that low of this candle, it might be a good idea to then start saying, let me cut my losses. Why am I saying that? Because this is the thing. Because the market's going to chase after liquidity, right? It's going to hunt for liquidity, which means if there is a low down here, and that is 400 pips down, all right, then you either got to be prepared to keep adding positions in, all right, to stay with the market. So when we have a retracement back to rebalancing equilibrium, you can get out and make some profit on that trade and then reverse it. But if you decide that this year I don't want to be in long positions, then you have to realize that I have to accept that I'm going to take some losses. But it's okay. You'll make it on the upside, because if the market shows that there's a 400 pip opportunity going down south right here, and you decide to cut your losses as the market trades below the low right here, you can start looking for the sell-off right here and start selling it towards this liquidity level and trade positions going down to this level. Take short-term profits in and out, in and out, in and out, as it starts trading towards this liquidity area right here. And so traders, you have a choice. I'm going to just let you know that if you follow my trade ideas and I go ahead and say, hey, my master account is going to be putting adding positions. I've managed my risk that way. I'm going to protect my position that way. So I'm going to constantly add in positions. That's what I'm going to do. All right. Now, what I do doesn't necessarily mean that fits your comfort zone. Everyone has different comfort zone. So let's talk about, hey, where can I go ahead and just cut my losses? If I don't like this trade anymore, where do I cut my losses? What gives me a signal or gives me the answer I need without me trying to read up crap on the internet or try and ask everyone, ask your neighbor, what must I do with my trade? Stop asking people that don't understand your strategy, don't understand how you've managed your risk, don't understand what position what position you are, Don't ask them for advice because they're going to give you pure junk. This is what you need to do, because some traders will probably say when you tell them, hey, I've got 20 positions in, what are they going to say? You're mad, you're crazy. Why are you trading against the trend? And you're like, yeah, why am I trading against the trend? Well, we're not going to go back into that conversation. We know why, because you bought it when the market was trending up and you've didn't get out with profit and the market's now moved against you. The question is, what are you going to do about your positions? What are you going to do about positions? Are you going to cut it short, or are you going to continue to buy in the market and to wait for the market to rebalance? Do you have good equity management that you can wait for the market to rebalance? All of this stuff is important, all right? But the decision cannot be me making it for you, all right? It has to be a decision you make, at least not on the signals that I'm sending out there. But this is the answer to your problems. For those that I don't know when to make that decision, I'm going to be having very soon a strategy built in that can give us a lot of positions that we can, a lot of positions, a lot of trade opportunities, but also cut your losses short. All right, so we're going to go ahead and we're cutting the losses short, and we're allowing the others to run. Cut your losses short, let your profits run. Traders, stay tuned. That's coming soon. I'm going to be talking about that very, very soon. So make sure, traders, if you have not subscribed to the channel, go ahead and subscribe to the channel. We're going to get a lot more of this information down the line over the next couple of weeks, heading into the new year 2025. Great opportunity for a lot of traders. If you've been making a crap load of money from my strategies, my signals, then trust me when I tell you, 2025 is going to be absolutely mind-blowing. The things that we've coming up with is going to be great stuff. So with that being said, traders, hey, listen here. Thank you for joining us. I know it's late at night. I wanted to give you guys a little heads up of what's going on over the next 24 hours as we head into the weekend. I will be back with my live sessions back next week, traders. So make sure that you guys pop in there, and I will see you in the live session. So with that being said, have a blessed weekend. This is FxBigDog signing off.